Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with Mr. Greg Dickerson. How you doing, sir?
Doing great, Michael. Good to see you.
Nice to see you. So I don't know if you've seen it, but over the last 2 weeks or so, we have seen more and more content creators who I respect. Gary V, if Grant Cardone did it, Valuetainment's just done it, Rich Dad did it. All of them are talking about, hey, we are even Dave Ramsey. All right, we're in a recession. How do you take advantage of this? This is something you and I've been talking about for 6 months. So folks, go check out his playlist. But let's just remind people of one of your sayings, right? Good times never last, bad times never last, and we are in that second. But man, there's so much opportunity if you just control your mind and you don't let fear take over. There's tremendous opportunities to build wealth in the next couple of years. Wouldn't you agree?
Yeah, I mean, there's opportunities in every environment. So, people do deals and make money in every environment. Recession, depression, boom markets. There's always opportunities there. You just need to understand, you know, what your requirements are, what kind of returns you're looking for, what kind of deal you're looking to make. Understand, the macroeconomic environment surrounding you in your area, and even micro, depending on what you're doing. But at the same time, block out the noise, right? Because there's always noise that goes against what is what to be true. So you have to understand your game and understand your parameters, and then block out the major noise. But at the same time, if they're going to build a stadium next door to a piece of property you own, you want to know about that. Or they're going to build an industrial plant next to a property you own, you want to know about that. So you got to keep an eye on the big picture. But at the same time, you got to, your business is your business. You need to understand the fundamentals of it and focus on it, and just make sure that you're not allowing the narrative of the noise to stop you from doing deals. There's always deals.
Yeah, I think Gary V kind of said it most cleanly, kind of as he was answering questions at one of his events. He basically said, stack cash, buy assets. It's kind of simple, right? We talked about it. Time to stack cash, live below your means, do what so you can have these things. And again, go learn your market. Also, something you and I've talked about is it's not always about price. Terms. A lot of people, a lot of kind of investors always think it's about price. And again, you've told me this, right? The best time to buy a business is in a recession, and the best way to buy a business is with terms, seller financing. So there's just tremendous opportunities coming for those that prepare.
Yeah, it can be. I mean, those aren't always the best, but those can be good times. And it's interesting. I was listening to Sam Zell this morning. He's been at it for 50 years, and he said, unfortunately, the market never goes down when I'm fully liquid.
I heard that. I actually watched that Bloomberg interview. I saw it this morning too.
Yeah, it was really, really interesting to hear his perspective on recessions,
Yeah.
and peaks and valleys and interest rates. And you and I know, I mean, we were doing deals and still doing well with interest rates twice where they are now. So, a lot of people think interest rates are high, but relative to where we came from and where we've been in the past, they're still very attractive and very good.
Mm-hmm.
Problem is assets, have inflated to the point to where, the things don't work. But yeah, these downtimes and recessions and stress, can be, great times to be opportunistic and find deals and, pick up deals and things like that. But you got to be careful, because you don't want to catch a falling knife. You need to make sure that you understand the numbers and the fundamentals and, the base of where you need to be versus where it can go. And, just understand where you are in the market, what that climate looks like. And, the other thing too, that he said that was really cool was he said, you really need to understand the barriers of entry into whatever business it is you're looking to get into. If there's no barrier to entry, then you've got a lot of risk,
Yeah.
and if there's, a lot of barriers to entry, then you have more potential opportunity and upside. And that works in any, economic environment.
Yeah. Again, the last thing to kind of talk about, a lot of folks started investing in the last, I don't know, call it 5 to 8 years. They've only known an up market. They may be feeling themselves a little bit. I know that I did back in the day. This downturn, I think this downturn is I think it's going to be kind of a combination of the dot-com crash and the Great Recession. Right. The dot-com crash was very tech related. The Great Recession, very real estate related. This one's going to be kind of the entire economy. And then they talk about the average recession being 18 months. This one doesn't feel like average to me at all. This feels like it's going to be a longer one. I think I'd prepare for this potentially be on the short end 2 years. And I got to be honest, this doesn't feel good to say. This could be 4 years of kind of just a slow slog through this, very much like the 1970s. It was just a yucky economy for multiple years. What do you think?
Yeah, I don't know. So we're not in a deep recession. So it's a
Yep.
technical recession. We've had GDP decline, for 2 consecutive quarters, or we will, when the next GDP print comes out.
Mm.
I guess when is that, like next week or
20,
something?
27th. Yeah, I don't, you know what? I'll take that bet. I bet you it posts like a 0.1, 0.2 positive, but that's just a guess.
Do you think it's going to be positive, not negative?
Slightly. Yeah. Very, very slightly. Yeah.
Yeah, I think you're still
Retail
going to
stuff.
see a -1,
Okay.
probably somewhere in there.
Yeah. Fair
So
enough.
again, it's technical. So what is recession? Recession is businesses are closing, people are losing jobs, those types of things. I mean, that's a recession.
Mm-hmm.
We're not there. We're not anywhere near that right now. I mean, we do have some layoffs going on, but there's still way more jobs than there are people willing to take them. So when you have something like that, it's very difficult to be in a recession. So all we really have are super high prices. We have inflation that still needs to, be tamed and get under control. And we'll see if the Fed's got, the backbone to really get after it, at their meeting next week. So we'll find out. And maybe this week we'll see what they're telegraphing. We don't know yet. It's, kind of 50-50 right now.
Yeah, I think they have to do 75. This whole
Well, we
talk.
know that. The question is, will they do 100?
No, that's not going to happen. They're starting to see, because this week is a bunch of economic data about housing. We've already got the report today on home buyer or home builder sentiment. We already talked about it. Video number on historic crash, all of that. Tomorrow, new construction. It's estimated. I can't believe these people are estimating a positive number. They're estimating that new construction will show 1.5416, up 2%. I guess that number is going to be negative tomorrow. My guess, and probably negative. I mean, you and I talked about builders are stopping. They're slowing down. How do you think these numbers are going up? And then
they're again, this is not current. This is past. So it's looking back to the previous quarter, and there's still a lot of stuff in the pipeline. So
we'll see. Yeah,
that it's going to be skewed.
It could be.
Next quarter is going to be a big one for home builders because it's just everything's catching up.
Yeah.
But back to your point about a recession and how long it could potentially last. So we've seen, the .com, that was a couple of years of decline, just like 2008 and 9, but it was several years to get back.
Yeah, yeah, it's exactly right. Right. The decline was like 18 months, but the bottom, right? We were there for what, 3 years or something? It's crazy.
Yeah. And same thing in, 2008, 9. I mean, it was several years to get to the bottom. And then it took, well, that was a V shape because of, QE and all that in terms of the markets, but the economy, that's where you had a real recession, job loss, the construction industry, the housing industry, mortgage. I mean, everything around housing, that was a real recession where there was a lot of job loss and a lot of, things that we talk about that really define a recession. And, businesses going out of business, closing, all that kind of stuff. The only thing, we've been off to the races ever since. The interesting thing is with QE, zero interest rates, with no inflation. What created inflation? The pandemic. I mean, it was the war, obviously, that added onto it, but it was really the pandemic because everything was shutting down. So the real question is, would we ever have been in an inflationary environment facing these issues without a pandemic and without the war? We weren't. You and I were talking about it, man. We just keep going to new all-time highs every day. Everything's fine. We're not seeing inflation, and it was really weird that we didn't. As much growth and demand and all that. So, once you get those issues resolved, then arguably, if you taper demand now, supply should come back into check, and then we're back off to the races again. And, we just weren't experiencing it before. So it's, how long will it go? When are we going to get back open again? The supply chains open back up. All these pandemic issues are gone. The things that are sticky are labor, wages. I mean, that you have higher costs of labor because so many people have left the workforce. So that's put a lot of pressure there. So that's kind of sticky. How long will that last? Well, I mean, we're going on a year that, it's been back to work and people are like, no, thank you. So people are still leaving the workforce. So we'll just have to see how that goes along. We know food, energy, all those things have not peaked. They're not tapering. Oil is only a very small segment. And it's on the way back up. And there's a lot of, thought out there that it's going to be back to $120 a barrel or somewhere around there, in terms of that. When you get into the fall and winter, that's when you see the real effects of energy prices and stuff. So, how long could it last? I mean, really, until we get through this whole pandemic mess and the world opens back up again. And, that's the large effects of why we're seeing supply chain issues around the world. We're really not going to know.
Yeah. Yeah. Again, I would, part of my job, again, trying to put money to work, trying to buy assets, is I have to prepare. I have to try to look around the corner. I don't see how this mess gets behind us any shorter than 2 years. So we're talking out to 2024. And I'm telling myself, Olivia and I talk, I'm like this, this, we could be in this muck until 2026. Again, I don't say this to scare people. I'm not trying to make people in action. I want you to prepare. I want you to be excited. The greatest opportunities to build wealth are in bear markets. Get assets on sale, get terms when you can, when they make sense. I want you to be excited, but I also want you to realize that, the next few years aren't going to be as fun as the last few, in my opinion.
Yeah, I mean, obviously the raging bull market environment we've been in all asset, classes, I think that's over for a little bit. But, the interesting contemplation is we haven't really started yet. We haven't even really started, so there is no real recession. Inflation is still out of control. The Fed really still hasn't done a whole lot. Everybody says all they're doing, they haven't started rolling off the balance sheet.
Not very much. Very little. Minuscule.
Interest rates have risen a little bit, but they're still basically negative, real rates at this point.
Absolutely negative.
Yeah. So, I mean, we haven't even started yet. So the question is, when do we get started? And then you can start talking about when's it going to end.
Yeah. I love this. Thank you so much for being a part of my Monday for the channel Monday. People love hearing from you. You have lots of fans on this channel. Folks, do me a favor. If you're not following Greg Dickerson, you need to do that. Where can they find you?
Yeah, YouTube, Greg Dickerson, go check it out. My channel is easy to find. And then my website, gregdickerson.com, the links to everything is there. So yeah, that's where it's at.
Thank you, buddy.